look at the risk disclaimer, take it on board, make sure that we understand it. I hope that we do, because I don't know how many videos I've done now, but there's been quite a few. So let's move on. The bat pattern. The bat pattern is one of the easiest patterns to draw, as it works on most of the initial fib drawn, less time consuming to work out. It also has one of the tightest stops of most patterns, so offers the best risk v reward ratios. As per the Gartley pattern, we still need to understand that this pattern has the same amount of moves as listed below. However, the only difference is how these moves are measured. So the below list, as seen on the Gartley and many other patterns that we're going to go through, has these 5 legs, which we're going to break down. So if you've watched the Gartley and this is the second vid, you can skip this point, but if you haven't, X is the start of the trend, A is the end of that trend, B is the first pullback, C is the pullback of the pullback, not breaking point A. However, we'll break that down a little bit further when we get into the pattern. And D is the target of C, so this would be pattern completion. So to work out a bat pattern, we need to understand how to draw and measure the pattern. We'll go through how to draw and identify the pattern. There are many ways these patterns can be drawn, as all patterns work within ratios, and I found this way to be the easiest way to simplify the pattern. This is the second time I've done this vid, and the reason is the same as I've redone the Gartley, is because I want it to be clearer. I don't want there to be any ambiguities in the way patterns are drawn, and I don't want there to be any areas that are unclear. So instead of it being it needs to break this, what I'm trying to do is say, right, it needs to get past point A, but it cannot get past point B. And that's what I'm trying to do with the patterns. I'm trying to make it so there are clear lines rather than areas. Okay, so that's why I've sort of redone these videos. So number 1, A to B should be a minimum retracement of a 382 of the X to A leg and not go past the 50. We'll break that down a little bit further, and obviously if you're making notes this would be a good time. However, we will show you a video like the previous Gartley vid, so don't concern yourself too much, but if you're making notes this is where you want to be making them. Number 2, move B to C should then retrace between the 618 and must not breach the 786, very much like the Gartley. And the C to D leg completion is always at the 786, but must not breach the 886 of X to A. So it needs to go past the 786, but can't go past the 886. You can also use confirmation of this from an extension from the A to B leg of a 618, which is always there or thereabouts. Again, it's just an extra bit of confirmation. If you want the gold standard, you need to do that extension. So, but number 3, as per all patterns, is the area we're trying to predict before price gets there. Otherwise, if it gets there, we could be too late in the pattern. So obviously we want to make sure that we're drawing these patterns out before price reaches that level. Okay, so let's move on. So the first one we're going to look at then is the bullish bat pattern. So we always trade the direction from the X to A leg, and that's the same rule as any pattern. So on this, we're in a bullish move. So X to A, that's the impulse leg. A to B is a retracement of that leg, which must breach the 382, but can't go past a 50. B to C is then a retracement of the A to B, must hit the 618, but cannot go past the 786. And then the C to D leg must go past the 786 for pattern completion, but it can't go past an 886. And if you want to confirm that, you do an A to B extension or a B to A extension, depending on how you're drawing the fib, and obviously then we'll be looking at the 1618. But let's look at a video for that one. Okay, just to break it down. So here we have X to A move. We then draw a fib for the overall move, and on a bat pattern we want it quite high, as in quite wide. Not that you're going to know a bat pattern, but always make sure that you give yourself enough space to draw. Okay, so we need to go past the 382, but we can't go past the 5 retracement, okay, or a 50% retracement. We then draw another fib from high to low, A to B. Excuse me. We then must breach the 618, but cannot breach the 786. That is your B to C leg. We'll delete that fib just so it's a little bit clearer. And then the next move then, C to D, we must hit the 786, but we can't breach the 886. Clear lines here, guys, hence why I've redone this. If you want to confirm that move, you do a extension, and there you go. It's gone past the 1618 and it's gone past the 786. Okay, so we are in the zone. Okay, it's quite a large zone because it may just breach the 618 extension, and obviously then we trade in that direction. So some people leave out the 618 extension because all you're doing is widening your zone, and a lot of people trade this pattern as in between the 786 and the 886, and that's the way I originally did it, really. However, a lot of traders say, well, actually you can do a CD completion between the 618 and the 786, but the golden standard is to have gone past that 786 but not past the 886. If you choose you don't want to do the extension, that's fine. However, it's just another added confirmation, okay, that the extension from the A to B leg has indeed breached. Okay, so that is the bullish bat. We're now going to move on. We'll look at the bearish bat. Same rules apply then. X to A to B pulls back a minimum of 382 but a maximum of 50. B to C then pulls back on their A to B move. Minimum of a 618, maximum of a 786. And then the C to D move is a minimum of the 786, maximum 886, but it can also be just the 1618 extension of the A to B move. You would then trade in the direction of the X to A leg as per all patterns, but obviously from a drawing point of view, let's look at it being drawn out real time. So X to A, downward move, bearish. Okay, swing high to swing low for your fib. We then draw the A to B. It must breach the 382 but cannot breach the 0.5. Draw another fib from that A to B. Okay, and then we're going to draw a line from there, and we're going to go down to must breach A618, can't go past the 786. That's our B to C leg. Then delete that fib just so it clears the charts. And your C to D pattern completion would be a minimum of a 786 and not go further than 886. We'll look at the extension again from the B to A, okay, or A to B leg. And as we can see, 786 is always the right side of a 618. I wanted to add that, and obviously then we trade down in the direction as it's a bearish pattern, so we're looking at a bearish trend. So you're probably saying to me, well, you know, Brandon, to be fair, I'll just stick with the 786, forget about the extension, it's another drawing I'd need to do. However, the reason I've redone this vid is some traders would say, well, hang on, you're missing out on the zone here because you've not drawn that 618 in, and that's why I wanted to redo the video so it was clear on technically what you should do. However, you may change this to suit your style, because you may say, well, Brandon, I'm more than happy that once it gets past that 786, it's always gone past the 618 because we are working within ratio, so it will always make sense. As long as it doesn't go past that 886, the pattern is still valid. Okay? So, let's look at how we trade it then. Right. Trading the back pattern. We'll leave it bearish because that's the last pattern we looked at, so it makes it easy. Right? The pattern is drawn. I'm not going to dwell on that anymore. Stop loss. As per all patterns, some people do it at the X leg, the start of it. Some people will do it minus the spread. Some people will do it 10 pips above the X. That's down to your trading style. Me personally, it's a few pips above the X as I want to limit the losses. If it does roll the other way, then that's my choice. And if you look at some of the extensions when you are trading, it would completely invalidate the pattern anyway. You may want to sort of take that into consideration. Well, where would the 886 be on the overall pattern? And put it sort of just outside that area. But obviously that's still going to be within inside your X, but it's down to you where you put that stop. You've ultimately got PRZ, we know what that is. From that PRZ, we're then looking, when it's in that zone, because obviously we would have drawn this pattern before price gets there. So when we get in the zone, what are we looking for? We're looking for a trigger, an entry point to that trade that you alone use on your trading plan. Now that could be MA cross arrows, the break of an MA line like an ATMA, candlestick formations, anything. It's still your trigger. Once that reversal zone, it's come out of that reversal zone, on a trigger, you would enter the trade. Okay. Now the first trade will always be, your take profit level will be at the 382, and your second profit level would be at the 618. Now, depending on how you trade, you may want to go in with a lot size to take profit 1 and reduce that loss size after the retracement, because price very rarely, it does happen, go from take profit 1 to take profit 2, but it very rarely does it instantly. So sometimes you get a retracement where it pulls back a little bit. Some traders will just go in with 1 lot size and have take profit 1 and be done with it. Some will go to take profit 2, same lot size, and that would be them exiting the trade. So I personally would trade it take profit 1, then I would scale out my trade. When it retraces and then goes back to take profit 2, I would be half the lot size and I would trade it to that take profit 2 level. But that's down to your trading plan. The one thing I want to clarify at this point is when you are trading and it reaches this reversal zone, ensure that if this pattern draws higher and higher and higher, we need to move the fib to that level and to readjust, because if this moves 4 or 5 pips in that direction, then obviously the targets will move up. Alright, so you want to make sure that the target levels, yes, you're reducing your profit, but if you leave them all the way down here and the pattern is up here, you may miss your target levels and the price will then go against you and then set up a new pattern. So always ensure that you move your fibs to the redraw of the pattern to make sure that your take profit levels are still valid. Otherwise you will come down, it will literally just miss your take profit and then you'll miss out on the trade. I hope that's helpful, guys.